Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by. Wrong button. Where did we get that one from?
Quiet, numbskulls. I'm broadcasting.
Well, I do have a great team when it comes to developing a financing plan, a plan to save you money. I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, we're celebrating today. This one, I don't know. I got mixed emotions here. Today's National Empanada Day. Are you an empanada person? Josh, you like empanadas? Okay, you like spicy stuff though too, don't you? Yeah, I'm a wimp. I don't like the spicy stuff, but I guess from what I heard earlier today, I guess the empanadas, it's like a pastry that has some stuffing in there. Portuguese and Spanish descent. Means wrap or coat in bread. Now, I like bread. Now, I guess I would really like it better if, cheese or fruit filling, something a little sweet. I'm not a spicy individual. Spices, yes. Spicy, no. But it is National Empanada Day, so yeah, we celebrate. What the heck? Let's have fun. It's Ron Siegel Radio. We do have a good time here every once in a while. Speaking of a good time, wow, look at the markets today. We are looking at the Dow Jones Industrial Average up 1,329 points. Yahoo! We got the NASDAQ. It's up 651 points. The S&P 500 is up 173. And oil down 16%, down $18 a barrel, $94.57 a barrel. Most of the country will probably like this, but in California, yeah, I'm sure that Gavin will find a way to tax us more. $4.16 is the national average of a gallon of gasoline. $5.93 here in California. We are one of those few states that are over $5 a gallon. Did you notice as we look along the West Coast, it's the three West Coast states are $5 over $5 a gallon. Hawaii is over $5 a gallon. Yeah, Josh, you just slipped in. You guys got it too. Just a little bit over $5 there in Nevada. But that's about it for the $5 states. And it'll take a while for gas prices to come down, even though we're watching oil down $18 a barrel, but all due to, I'm going to say, the ceasefire. Now, is there really a ceasefire? Hard to say. I'm going to say that I don't hold a lot of hope in there.
I got a bad feeling about this.
Why do I say that? Well, Iran already stopped some ships from going through, saying that going through the strait, which was part of the idea of the ceasefire, saying that Israel must stop bombing the Hezbollah over there in Lebanon. Well, if Hezbollah doesn't want to stop bombing Israel, why would they stop bombing the other way? I don't get that. But it seems to me that, and even if you noticed, after the ceasefire was announced yesterday, there was still some bombing coming through to Israel. Now, I would suggest that if we could see where those bombs are coming from, send one back to them and just let them realize that it's not going to keep on going on, and they did not win the war. That they can be taken out at any time, at any place. But and I talk about this a lot because it has to do with our home and finance. You see, when the markets were at the end of February, we had some really strong housing market going. We had strong mortgage rates. The conflict took over. And I had some people that pushed back on me when I said the last war that the United States was involved in was World War II. Now, I am not disparaging those people that fought in Vietnam or in Korea or in the Gulf, one or two. I'm just saying from a technical standpoint, technical is that the president does not declare war. Congress has to declare war. So yes, we were involved in Vietnam for a long time, but technically that was not a war. It was a conflict, a long one, but Congress did not declare war. Yet I hear so many people saying that, well, Congress is the only one that can declare war. The president is doing this illegally. Well, maybe Congress ought to do some research on their own instead of just talking. Now I want to hear, I'd love to know if anybody that listens to Ron Siegel Radio has ever heard of something called, let me find the correct name here. It's a Hwasong 15. You ever heard of a Hwasong 15? I would say 99.99% of the people have not heard of a Hwasong 15. What is it? It is a North Korean missile where all of the parts are in. North Korea sent all those parts to Iran. It has a range of 8,100 miles. Now you do your own math. 8,100 miles from Iran gets anywhere in the United States. They have that. Now, have they put it together? No one knows because they do that stuff underground. Now, maybe some of the intelligence people know that. I don't know. But you start saying, okay, you've got 460 kilograms of 60% enriched uranium. It takes 2 weeks to get that to 90%, which is weapons grade. You already have the parts for the ballistic missile to go 8,100 miles. Do you want to wait for that to happen and have a intercontinental ballistic missile coming from Iran to the United States? Yeah. Where is that? What do you say about that, Rokana? Why haven't you talked about that part of war crimes? It just amazes me. But we'll continue to watch. We'll continue to listen. Watch the president playing chess while so many others are out there playing checkers and maybe even hopscotch. I don't know. It's just maybe it's whack-a-mole. You are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, thinking about an adjustable rate mortgage, here's what you need to know. From family trust to family feud, how the wrong trustee changes everything. I had a family ready to pay off their mortgage in a panic until we did the math. What if the biggest threat to your retirement is not your mortgage? All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 01869452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Mortgage Minute today being brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. And every day at this time, OPMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number you need to put in your mortgage calculator to determine your principal and interest payment. Mortgage calculators are free from Ron Siegel Radio, rsrlinks.com/calculators, rsrlinks.com/calculators. What did rates do yesterday? Yeah, they were ugly. Most of them were up. Conventional 30-year fix, 6.356. Jumbo 30-year fix, 6.56. That was the only one down. FHA 30-year fix, 6.138. That was up. VA 30-year fix, 6.037. That was up. And USDA 30-year fix, 6.058. That was up. Want our thoughts about the market? Each and every business day morning, as early as the data allows, rsrlinks.com/HBOD, rsrlinks.com/HBOD. That's where we put our thoughts about the market in the Ron Siegel Radio community. What are the markets doing today? Well, we've got the S&P 500 is up 169 points. Yeah, we like that. And we've got the 10-year Treasury down about 2.5 basis points, 4.27. And the mortgage bond up 22 basis points, bond up, rates down. We like that as well. All that's available, super secret website, google.com. Why is it happening? That's not on the super secret website. So let's take a look and see what is driving the market. Yeah, you know it. Oil prices dropping significantly after the U.S. and Iran agreed to a 2-week ceasefire and reopening of the Strait of Hormuz. President Trump issued a 15-point peace plan with Iran. And on Monday, Pakistan intermediaries delivered a 10-point peace plan from Iran to the U.S., which the administration said was a workable basis. President Trump said that Iran had already agreed to many points on his 15-point plan. But when looking at what Iran is asking for, it seems two sides are very far apart. Of course, things may have changed overnight as negotiations have occurred, leading to the ceasefire. But Iran's 10-point plan, U.S. commitment to ensure no further acts of aggression, maybe. Continued Iranian control of the Strait of Hormuz. Doubt that happens. Acceptance of Iran's nuclear enrichment rights. That'll never happen. Lifting all primary sanctions, maybe. Lifting all secondary sanctions, maybe. Termination of all UN Security Council resolutions against Iran. Termination of all IAEA Board of Governors resolutions against Iran. Payment of damages to Iran for losses in the war, no chance. Withdrawal of U.S. combat forces from the region, not going to happen. 10, cessation of hostilities on all fronts, including Lebanon. Hard to imagine a world where the U.S. would agree to most of their asks, including continued control of the strait, acceptance of their nuclear enrichment rights, and payment of damages, amongst other things. For now, the markets are liking the optimism and avoidance of further escalation based on Trump's threat of the strait if the strait was not reopened and a deal was not put together. Pakistan's Prime Minister, Shehbaz Sharif, who helped mediate the ceasefire, said in a post on X that he had invited Iran and U.S. delegations to meet in Islamabad on Friday. Iran said it would participate in the talks, while the White House said it would consider in-person talks. Later today, there will be a 10-year auction of treasuries, which could impact the market depending on level of demand. It will be interesting to see if there is stronger demand due to the easing of geopolitical tensions, if traders feel yields will continue to fall. The Fed minutes from the March 18th meeting will be released at, I think it's 11 o'clock Pacific time. Old news. And a lot has happened since that Fed meeting 3 weeks ago. This was the meeting where some hawkish Fed members said the Fed should not only be contemplating cutting rates if inflation falls, but hiking them if inflation rises. We should be on guard for what that likely hawkish Fed minutes today. Fed's favorite measure of inflation, personal consumption expenditures, will be released tomorrow. It's released from February, so it's older data as the BEA is still lagging from the shutdown. Get to work, guys. Because of that, it will not include the rise in oil prices in March and will be less meaningful. The market is expecting headline year-over-year inflation to either remain at 2.8% or to decline to 2.7%, depending on the estimate. Most important core reading, which strips out food and energy prices, is expected to fall from 3.1% to somewhere between 2.8% and 3%, depending on estimates. That is the Mortgage Minute, brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. Borrow Smart segment today being brought to you by gethomeselect.com. Let's talk about this one. This is a common issue that we deal with on Ron Siegel Radio. Medicare, 4 parts. Most people can't name even one of them correctly. That's a problem because getting this wrong could cost you tens of thousands of dollars in retirement. I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. Now, before we go any further, let me be clear about something. I am not an insurance agent. I don't sell Medicare plans. That's not what I do. But here's why I'm bringing this up. Healthcare costs are one of the biggest threats to your financial plan in retirement, and I work with a network of professionals who specialize in Medicare planning. So my job today is to make sure you understand the basics and then connect you with the right people to get it done properly. Let's break it down. 4 parts, A, B, C, and D. Part A, think of this as your hospital coverage. If you end up in the hospital for inpatient care, that's Part A. It also covers skilled nursing facilities, hospice care, and some other home health services. Most people don't pay a premium for Part A, which sounds great, but don't let that fool you. There are still deductibles, and here's the one that catches people off guard. Medicare Part A only covers up to 100 days in a skilled nursing facility, and that's only when certain conditions are met. The first 20 days, zero cost to you. Days 21 to 100, you could be looking at over $200 a day in coinsurance. After day 100, you're on your own. Let that sink in. If you or a loved one needs extended care beyond 100 days, Medicare is not paying for it. That's where planning ahead matters. And that's something most people don't think about until it's too late. Part B, this is your outpatient coverage. Doctor visits, lab tests, outpatient procedures, durable medical equipment, the everyday stuff. Part B comes with a monthly premium. For 2026, the standard premium is about $203 a month with a yearly deductible of $283. But here's the part people miss. If your income is above a certain threshold, you pay more. That's called IRMAA, the income-related monthly adjustment amount. The more you earn, the higher your Part B premium. So your retirement income strategy directly affects your Medicare costs. See how this all connects? Together, Parts A and B make up original Medicare. And for a lot of people, that's where the conversation stops. But it shouldn't. Part C, Medicare Advantage. These are plans offered by private insurance companies approved by the federal government. Think of Part C as an alternative to original Medicare. Many of these plans bundle Part A, B, and often D together, and some include extras like dental, vision, and hearing. Sounds great, right? But not all Medicare Advantage plans are created equal. The networks are different, the copays are different, the out-of-pocket limits are different. Comparing plans is not optional. It's essential, and that's exactly why you want a professional walking you through it. Part D, prescription drug coverage. If you're on original Medicare, you can add a standalone Part D plan for your medications. Every plan has its own formulary, which is just the list of drugs it covers. What you pay depends on which tier your medication falls into. If you're on a Medicare Advantage plan, drug coverage might already be built in, but you still want to verify that your specific medications are covered. So why is a mortgage guy talking about Medicare? Because I see it every day. Families come to me with a great financial plan on paper, but they never accounted for what Medicare doesn't cover. extended nursing care, out-of-pocket drug costs, premium surcharges from IRMMAA. These are real numbers that eat into your savings, your liquidity, and your ability to protect wealth. When I talk about safety, liquidity, and return, healthcare planning is part of that conversation. You have to know where your money is going, what's protected and what's exposed. Here's what I want you to do. First, go to rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. It's a free resource to help you take the right steps with your overall financial strategy, including healthcare costs or how healthcare costs fit into your budget. And if you want to be connected with a professional who specializes in Medicare planning, no cost to you, estate planning, or long-term care strategy, go to rsrlinks.com/estate. That's rsrlinks.com/estate. I work with people who do this every single day, and I'm happy to make that introduction. I am Ron Siegel, your Certified Liability Advisor, helping families build wealth through strategic debt management. Thanks for listening to the Borrow Smart segment brought to you by gethomeselect.com. Borrow Smart segment brought to you by gethomeselect.com. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, thinking about an adjustable rate mortgage, here's what you need to know. And from family trust to family feud, how the wrong trustee changes everything. All that and more. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's...
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Think about an adjustable rate mortgage. Here's what you need to know. If you've been looking for a home lately, you've probably felt how tough affordability still is, and that's exactly why more buyers are opting for adjustable rate mortgages or ARMs. Here's what you need to understand about how they work and whether they make sense for you. Since a lot of people aren't familiar with this type of loan, let's start with a definition. This is how Business Insider explains the main difference between a fixed rate mortgage and an adjustable rate mortgage. Quote, with a fixed rate mortgage, your interest rate remains the same for the entire time you have the loan. This keeps your monthly payment the same for years. Adjustable rate mortgages work differently. You'll start off with the same rate for a few years, but after that, your rate can change periodically. This means that if average rates have gone up, your mortgage payment will increase. If they've gone down, your payment will decrease, unquote. Basically, one doesn't change much over the life of your loan, and one could change either by a little or a lot. Of course, things like taxes or homeowners insurance can still have an impact on a fixed rate loan, but the baseline of your mortgage payment is fairly steady. The big difference is that with an ARM, your monthly payment could change over time. So why adjustable rate mortgages are getting more attention? Why do some buyers choose this option? It's simple. It's because the upfront savings. Business Insider explains it like this, quote, because ARM rates are typically lower than fixed mortgage rates, They can help buyers find affordability when rates are high. With a lower ARM rate, you can get a smaller monthly payment or afford more house than you would with a fixed rate, unquote. And right now, according to Mortgage News Daily and the Wall Street Journal, the upfront rate on an ARM is lower than a 30-year fixed rate. And if you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 and FM 98.1 video feed, you are seeing that chart of the difference between the 30-year fixed rate and the ARM rate. If you're wondering how it shakes out in real dollars and cents, here's what Redfin says. According to their research, they could save about $150 a month by taking out an ARM instead of a 30-year fixed rate mortgage. For some people, that's enough to make a difference. Now look at that chart. And just remember, that's going to be that way for the 7 years. So if you're saving that money, $150 a month for 7 years, that's $1,800. I don't know. What's that? 1,800 times 7 is about $12,000, something like that. $13,000. Think about that. Now, if you think about it going up the other way, how long is it going to take you to eat into that $13,000? Now, remember, if you're doing anything less than a 7-year ARM, then you don't get the benefit of extra purchasing power. More buyers are choosing adjustable rate mortgages today. A growing number of buyers are willing to trade the uncertainty later for a lower payment now. Data from the Mortgage Bankers Association shows the share of buyers choosing ARMs has increased, especially over the last few years. This doesn't mean ARMs are becoming the go-to option for everyone. It only means some buyers are opting for this type of mortgage so they can still buy today. Take a look at that chart. More buyers are using the adjustable rate mortgage. You can see that over time, how that's growing. If you remember the housing crash, seeing ARMs gain popularity again may raise concerns, but rest easy. Today's ARMs are not the same. Back then, some buyers were given loans they couldn't afford once rates adjusted. Today, lending standards are stricter, and lenders evaluate whether borrowers could still handle the payment if rates rise. So the return of ARMs doesn't signal another widespread crash. It just reflects how some buyers are adapting to today's affordability challenges. The trade-off and what you need to consider, if you're considering an adjustable rate mortgage yourself, just remember, it really depends on your situation and your risk tolerance. An ARM may make sense if you plan to move before your rate would adjust, or if you expect you'll make higher income in the future. But there are trade-offs you need to think about. For example, once the fixed period ends, your rate can adjust and your payment could increase, potentially by a meaningful amount depending on where rates are at the time. And keep in mind, there's also no guarantee mortgage rates will come down in the future, which means refinancing later isn't always an option. That's why it's important to think through your plan, understand your long-term earning potential, and work closely with a trusted lender before you choose an ARM. Bottom line, ARMs are getting more attention again because they can make buying a home more affordable in the short term, but they're not right for everyone. The key is understanding how they work, what the risks are, and whether they fit your plan. And that's why you need to talk to a trusted lender and financial advisor before you make any decisions. That is the Real-Time Real Estate segment, brought to you by rsrmoney.com, rsrmoney.com. Here's another thought about that adjustable rate mortgage. When you think about the adjustable rate, especially the 7-year ARM, and what do we say? We're going to save on that particular program that we showed the screen on. I think it says almost 0.5% in interest on there on the 30-year versus the 7-year ARM. Now, one of the things that no one talks about, or very few people talk about, I share this with a lot of folks, adjustable rate mortgages are far better than the 30-year fixed rate mortgage. Why? Well, 7 years from now, you have to assume that with inflation, you're going to be making more money than you are today. 7 years down the line, cost of living goes up, but your loan balance is decreasing. So around the 4, 5, 6 year mark, as we cycle, that's when we look and we say, okay, does it make sense to get a new loan? Lock in for another 7 years. We don't know what that cycle will look like. But one thing we do know is if you think about it, if you were trying to make a $2,000 a month rent payment or mortgage payment 10 years ago versus a $2,000 a month payment today, probably felt a lot harder 10 years ago because of the cost of living adjustments. So think about that going forward. That payment is going to feel a lot easier down the road. I had this consultation with a family a couple of weeks ago, and they were worried about where they are. And they said, Ron, I've capped out at my company with how much I can earn. I said, I get it, but let's do the math of what does your earnings look like if you get nothing more than a cost of living adjustment for the next 5-10 years. And they looked at that and they said, okay, well, now what I'm earning, and I don't remember the numbers, but just say hypothetically, say now it's $10,000 a month. Well, 10 years from now, it's probably going to be somewhere around $13,000 or $14,000 a month. Think about that concept. Now, the mortgage theoretically can go down. Even if interest rates went up, you've been paying on it for 7 years. So if you restructured that into a new 7-year adjustable, well, it's going to go, you're going to see a benefit there. So consider that. And I'm going to tell you, one of the best things you can do is talk to a liability advisor. There are some of us around, and have them work up the numbers for you so you can actually see with real numbers what they look like. What does the future of your income look like? And let's just say you're making $40,000 a year. Okay, let's compound that at 3.5% a year, the cost of living, and see where that gets you. Throw that out there for you. Borrow Smart segment today being brought to you by GetHomeSelect.com, GetHomeSelect.com. You spent months putting together a living trust. You hired the attorney, you funded the trust, you checked the box. But here's the question almost nobody asks until it's too late. Who's actually going to run this thing when you can't? I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. Today, I want to talk about one of the most overlooked decisions in estate planning, and it's a big one. It's choosing your successor trustee. Now, if you have a living trust, you probably named yourself as the trustee, and that makes sense. You're in charge of your own assets. What happens when you pass away, or if you become incapacitated and you can't manage things anymore? That's where the successor trustee steps in. They're the person who takes the wheel. And here's what I see all the time. Mom and dad sit down with their estate planning team, and when they get to the successor trustee question, they don't even think about it. They just say, oh, we'll name one of the kids. It feels natural. It feels right. You trust your children. You want to keep things in the family. Well, let me ask you something. Does your son or daughter know how to file a tax return? Do they know the fiduciary duties that come with this role? Because a successor trustee isn't just handing out checks. They have to manage and protect trust assets. They have to pay debts and taxes. They have to distribute everything exactly according to the trust instructions. They have to keep detailed records. They have to communicate with every beneficiary along the way. These aren't suggestions. These are legal obligations. If they get it wrong, they can be personally liable. Now, I'm not saying you should never name your kids. In some families, it works beautifully. If your family communicates well, if your siblings get along, if the estate is fairly simple, like a house, some bank accounts, and retirement funds, then an adult child can do a great job. But there's something people don't think about. Your kids get along great today, but what happens when they get married? Now you've got spouses in the picture. And look, a spouse has no legal authority over the trust. They're not a beneficiary. They're not a trustee, but that doesn't mean they don't have influence. Your daughter's husband has an opinion about when that house should be sold. Your son's wife thinks the distribution isn't fair. None of them have any legal standing, but they're whispering in your child's ears at the dinner table. And suddenly, siblings who have never had a disagreement in their lives are at each other's throats. I've seen it happen more times than I can count. The trust didn't change, the family dynamic did. And it gets more complicated from there. Let's say you have a blended family. You've been married twice. There are children from both marriages. Maybe the inheritances aren't exactly equal. Now you've named one child as the successor trustee, and the other children are sitting there wondering if their sibling is really going to be fair. That's not a recipe for family harmony. That's a recipe for a courtroom. Or think about this. You have 3 kids and you name 2 of them as co-trustees. Sounds fair, right? Except now every single decision requires both signatures. They can't agree on whether to sell the house or keep it. One wants to distribute funds quickly, the other wants to wait. You've created a deadlock, and that deadlock costs everyone time and money. Here's another one I see. You name your responsible oldest child as trustee. Great person, loves the family, but they've never managed an investment portfolio. They've never dealt with property titles or trust accounting, and now they're sitting there with a stack of legal paperwork trying to figure out how to sell a rental property that's still in the trust, while their siblings are calling every week asking when they're going to get their share. Even the most well-meaning person can make a costly mistake when they're in over their head. So what do you do? Well, you have options, and this is the part most people don't realize. You can name a professional trustee or a corporate fiduciary. These are people who do this for a living. They know the tax rules, they know the legal requirements, and they're neutral. They don't have a dog in the fight. Yes, they charge fees, but those fees can be a lot less expensive than the legal battle that happens when a family member makes a mistake. You can also set up what's called a hybrid structure. You name a professional trustee to handle the legal and financial side, and you name your child as a co-trustee or an advisor so they can still have a voice, best of both worlds. Or you can appoint a trust protector. That's someone who oversees the trustee and makes sure they're following your wishes. Think of it as a check and balance built right into the trust. The point is, you have choices, and the choice you make today is going to affect your family for years after they're gone. Here's what I want you to take away from this. Creating a trust is only half the job. Choosing the right person to carry out that trust, that's the other half, and it deserves just as much thought. If you haven't reviewed your estate plan recently, or if you need to connect with an estate planning professional who understands these issues, go to rsrlinks.com/estate. That's rsrlinks.com/estate, ESTATE. We'll connect you with the right people to make sure your trust is set up the way it should be. And if you want to take a broader look at your overall financial picture, your debts, your assets, your next steps, go to rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. Don't leave this decision to chance. The people you love deserve better than that. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Borrow Smart segment, brought to you by GetHomeSelect.com. GetHomeSelect.com. You are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, had a family ready to pay off their mortgage in a panic until we did the math. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Borrow Smart segment today being brought to you by GetHomeSelect.com, GetHomeSelect.com. Your 401k probably looked a little different at the end of March than it did on New Year's Day. And if you opened your statement and felt a knot in your stomach, you're not alone. But here's the question most people are not asking. Is this actually the opportunity you've been waiting for? I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. Now, before we get into the numbers, let me be clear about something. I am not a financial advisor, and I am not giving financial advice. What I do is help families understand their complete debt picture so they can make better decisions. That's strategic debt management. So let's talk about what happened in the first quarter of 2026. The S&P 500 dropped 4.63%. The NASDAQ fell over 7%. The Dow lost 3.58%. That's a rough start to the year. And the biggest reasons? Artificial intelligence shaking up entire industries and geopolitical tension in the Middle East that had investors on edge for weeks. January actually started strong. Retail sales were solid. Inflation came in where people expected. The S&P 500 even crossed above 7,000 for the first time. Then February hit, and the AI story took center stage. Investors started asking which companies would benefit from AI and which ones would get replaced by it. When there are no clear answers, markets pull back. Tech stocks led the decline and dragged everything down. March was a roller coaster. The Middle East conflict disrupted oil supplies. Volatility spiked, but stocks actually closed March on a high note with a big last day rally. It wasn't enough to turn the quarter positive, but it reminded us that markets can turn quickly. Now, here's where I need to say something that goes against every instinct most people have. When the market drops, most people want to pull their money out. They want to sit on the sidelines and wait until things calm down. That is exactly the wrong move. When markets pull back, that's when smart money goes to work. You're buying at a discount. Think about it. If your favorite store had a 5% off sale, you'd walk in the door. But when the stock market goes on sale, people run for the exits. Doesn't make any sense. Between 1980 and 2025, about 2,400 weeks, there were only 40 weeks where the S&P 500 dropped 5% or more. 40 out of 2,400. Past performance does not guarantee future results, but that perspective matters when you're making decisions with your money. On the housing front, existing home sales rose 1.7% in February. Mortgage rates dipped below a key level, and that brought some sellers off the sidelines. The median existing home price is at $398,000, essentially flat from a year ago. Inventory is at 3.8 months supply. Still below the 6 months people consider a balanced market, but moving in the right direction. The Federal Reserve voted 11-1 to keep rates steady at 3.5 to 3.75%. That's 2 meetings in a row with no change. The Fed meets again April 28th and 29th, so we'll be watching that closely. Here's what I want you to take away. Choppy markets are not a reason to panic. They're a reason to get serious about your financial strategy. And I don't mean a cookie cutter plan. I mean a strategy that's suitable for your specific situation. There's a big difference between what you're eligible for and what's actually suitable for you and your family. That's what a certified liability advisor does. We don't look at what you qualify for. We look at what makes sense for your life. We make suitable recommendations based on your whole picture. What is your household blended interest rate? Most people don't know that number. They focus on one mortgage rate and one credit card rate and miss the bigger picture. Your blended rate across all your debts is what determines your financial health. And when markets are pulling back and creating opportunity, you need liquidity to take advantage of it. I had a family come to me recently. They wanted to pay off their mortgage early to feel safe because the stock market had worried them. We looked at their full picture, their blended rate, their liquidity, their safety net. Paying off that mortgage would have drained their cash reserves at the exact moment they should have been putting money to work. That's not safety. That's a missed opportunity. Safety, liquidity, and return in that order. The worst thing you can do is make an emotional decision that wrecks your liquidity and takes you out of the market when prices are lower. So what should you do right now? Get clear on your numbers. Go to rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. It'll walk you through understanding your complete financial picture, not just one rate, not just one account, the whole thing, because strategy beats rate always. And right now, having the right strategy could be the difference between watching this opportunity pass you by and actually building wealth from it. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Borrow Smart segment, brought to you by GetHomeSelect.com, GetHomeSelect.com. So not a whole lot of time left, but I will tell you right now, the big thing that we're talking to people about, especially with this ceasefire in place and the market's doing better, who knows how long it'll last? I don't have a crystal ball. I do not know. But I will tell you that oil prices were down more than they are right now. So that means something's going on over there. I will tell you right now, the biggest thing that we're watching people do is get their financial house in order. They go to Key Steps. That's the first thing, rsrlinks.com/keysteps. And then they book a consultation with us. Bookrs15.com, bookrs15.com. They book a consultation and we look to see how much equity do they have in their property. If they've got a decent amount of equity in their property, the next step is we look and see, does it make sense to do that home equity loan we've been talking about? Quick and easy. It only takes about 10 days and it's all done for you. And it takes about 20 minutes is all of your time that we really need, about 20 minutes, maybe a half hour. But we get the offer for you right away, give you a couple of choices, not a whole lot of choices in it. And then we share with you how to take advantage of it. What do we want you to do? Look and see if it makes sense to consolidate all of your debts, not your mortgage, but your other debts, into this quick and easy home equity loan, pay them off, watch your FICO score increase potentially because of having a lower utilization ratio. And down the road, if we do see, as many forecast, lower interest rates, we consolidate all of that into one new loan and have long-term financing at a lower price for you. That is strategic financing. That is what we do as a certified liability advisor. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items that affect your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.